Hey, how's it going? So in this video, we're going to be talking about how to trade the S&P 500. So the S&P 500 is the biggest market index of the biggest stock market in the world. So when we're talking about this, we're talking about this market index, which is an aggregate of 500 of the biggest companies in the world, which has a huge market capitalization of $23.9 trillion. So each company is added into this index based on its market capitalization, its float, and its trading volume. So it needs to have a market. It needs to be bigger than $6.1 billion to be included in this. So when you're looking at the S&P 500, what you're looking at is the entire economy. So this index is very powerful, and it's very key in how you actually trade and make money, and how you actually forecast the entire sphere of the investing community. So right now what I have open is a daily chart. So let's just take a bird's eye view. Let's go to the monthly chart. So on the monthly view, what we see is that this index since 2009, so this area here is when the market crash happened. So this is when the market crashed in 2007, and this entire drop is when the market collapsed and everyone lost their jobs and all of the bad things happened, right? And then what happened here is that we see this pattern that occurred at this level here, and we see all of these candles here that had railroad tracks, and whatever happened, well, this was the signal of this market going up, and then it made a new high and dismantled this spot here. Okay, so let's make this golden. All right, so it dismantled this spot here, and then it made higher highs. So this is the actual recovery. So when this happens, this will always happen because this market will continuously go up. So you see that in this area, this market crash of 2007 happened at the same high as the market crash of 2000 happened here. So this is just how it tends to occur. So right now we're at this high place here, and we see that for the past couple of months this market has been going down. So this is due to the trade war and the slowing demand in goods and services in the international community. But this is basically showing the countries that are domiciled in the United States. And this is actually a little bit different from the way that the Russell 1000 or the NASDAQ is comprised, because the way that companies enter and exit the S&P 500 is based on a committee. So the committee decides who gets to be in this index. So basically, if you had bought here and held, whatever happened, you'd be getting all of these compounded profits, which is generally between 8 to 11.5% compounded profits. But when you're trading, you're going to be in and out. But the trend of the S&P 500 is generally up, as you can see. So here we basically plot the trend line first, right? So this is the first thing that we see, that we're still in an uptrend, and this moving average, 120 moving average, is showing that it's still well above average. And here, let's just take a week's view. So here we see that we are having a market top. We have this high here. All right, just to see it clearly, we have this high. This is another high. And so far, what we're seeing is that we are showing some strong bearish intent with this high. So this resembles a head and shoulders, although the neckline would be somewhere here, which would identify the place where if the market breaks this area, then it's going to be a downtrend. But as far as this is concerned, we're still in an uptrend because we're still above trend. And if the market does break the 1.4 area So this is 1.404. So this is just the 1.4 area, which we can see that there was some resistance, right? And then this resistance was broken. This resistance turned into support. So here, when we have resistance, it means that we have a roof, and the roof means that the market went down. So for for 7 weeks, about 2 months, the market went down based on this resistance. So you could have taken some profits there. However, this resistance was broken, and then it turned into support, and it's been support for 31 months up until this area, right? And then it also had all of this price action that we can see. So support turning into resistance, and this is the same area that is still showing us that there is still support. So however big the market cap is, however huge it is, what we're still basing the technicals on is the areas of support and resistance, which is the basis of all of price action. So all that is happening right now is us understanding these levels and the weight that they hold. So when the market comes back to this area, which is where the moving average is, and this is my 300-day moving average, which is going to be moving a little bit higher as this price comes lower. So at this area now, what we can see is a very interesting scenario here, that we have this area that was resistance once, twice, thrice, and currently for the 4th time. So this area is very visible on so many levels, and what we see is that when you see the moving averages slicing through price, it means that we're in an area of consolidation. So when this is happening, we're also looking at the trends, so to see what is exactly happening. So right here we have this trend line that is being broken on this daily level, and I'm not going to go beyond the daily chart because this is all you really need. So at this stage, we're seeing that this is a resistance, so we don't know when the market is going to beat this 820 level. So for now, we're just looking at trades to the downside. So some of the fundamental aspects that will help us to determine the level of the direction of the trend will be the fundamentals, which is where the actual trend is based. This is why it's called the fundamental, because it's the most important. So the most important consideration will be the fundamental, or the fundamental is the most fundamental consideration. So what's happening right now is that we're seeing that globally there is a weakening in demand, and there's a reduction in the projections of GDP and all of growth. So this is what we're going to be monitoring to see when the reverse will occur. So the previous uptrend lasted for 42 days, thereabout 47 or just 50 days. So this is about 2 months of the price moving up. Right, so we're gonna see how long the price will move down, because it could be trapped in this range. You see that this entire box here, from the 4 level to the 8 level, this entire range has to be broken in either direction in order to show us where the market is going to go. So it could possibly even reach the 2 level, which I thought was pretty interesting. This level here, at this level, this is a possibility that cannot be discounted, and the 4 level is a possibility that also can't be discounted. So when we're looking at this, then we're looking at the trend, and we're looking at how it actually plays out in terms of actual price action. So at this moment, what we're seeing is that there is a downtrend. So we'll see how this downtrend is going to react and how these levels are going to be broken down. So in general, what we're going to try to identify a breakdowns in prices. So this is the first breakdown that occurred, because here we have low prices. This is a minor level of support which was broken. All right, and as we can see, we have another level that has been approached. So we want to see if this level is also going to break down. So all of these breakdowns will occur in relation to the previous price action. So this is another breakdown that we're also going to be looking at, and all of these are breakdowns. So let's say this level as well is a breakdown here. So if the market continuously makes lower highs and keeps on breaking all of these levels, we're going to ultimately look at this level to see if there's going to be another breakdown. So in some reports, some hedge fund managers are saying that they're going to be out of the game and they're going to be on the sidelines, because this just shows that there is a weakening demand. So as we've seen from the bird's eye view, is that this trend has been going up. So possibly this could come to this trend line, a long-term trend line, monthly trend line, and bounce from this level, which is why we can't discount anything that happens, because this level ultimately is the key area that shows us what's what. So this is the 2112, and if the price does come down there, we'll just see what happens. So all in all, what we're discussing when we're talking about the S&P 500 is the entire economy. So America has the biggest world economy at the moment. So what we are projecting is the world's biggest economy and its recovery or its weakening. At the end of the day, all things being equal, this trend is going to resume going up. So if you are patient and cautious, you can wait for a couple of months perhaps to see what happens at these levels and continue in the uptrend and a breakdown at these tops, because eventually the market is going to go to 3,000. So when it's at 3,000, we're going to be definitely in a bona fide bull market. But until that happens, we're still below the 28 zone, and we are above the 2,000. So I do believe that we'll stay above the 2,000 for the foreseeable future. I mean forever, actually, because I don't see us going back to these levels. It's possible, but that would mean that there's a major catastrophe, that all of this wealth, about 23 trillion, is being wiped out. So all of these companies represent their market caps of whatever they are doing in terms of contribution to the economy. So the economy will eventually have to rebound, and whatever happens is in terms of business cycles. So when we are looking at this market index, what we are looking at are the historical references, and right now my chart doesn't have that doesn't have all of the crashes highlighted here. But what happens is that we have these business cycles, and so far this bull run from this low has been the longest bull run. This has been 10 years of growth, 10 strong years, and the business cycle usually lasts 8 to 12 years. So right now we're at a spot where the market should cool down for a little bit, just as it always does. In this area it did, in this area it did, and in this area it did. And this area was also the market cooling down, but then it ended up crashing, and this is the dot-com bubble when it also crashed. So this type of movement is something that is let's say a little bit normal. So this is the measurement of the dot-com crash, and this is a measurement of the housing market crash. So these areas are almost identical in size. Okay, so this same thing might occur, which would cause a crash, which would come to this area that's already highlighted. And this is just us estimating based on this leg and just the geometric patterns that are occurring. So this is a huge possibility, and we can't discount anything until we have the movement and we have the evidence in the price. So so far, what we're seeing is this occurring, and the possibility of a recession is truly there. But we'll see in the next coming quarters how the information is going to be disseminated. But the recession possibility is definitely there. But the previous recession is still ingrained in our minds. So the next crash will be a monitored crash, if there's something like that, or the next crash would be what Ray Dalio would call a beautiful deleveraging, because right now the market capitalization of the banks and of the Federal Reserve is huge. So right now they are in the process of reducing their balance sheet from 4.5 trillion to basically somewhere between 2.5 to 3.5 trillion dollars. So this deleveraging is going to be occurring, and people already know about this, or certain people know, but the wider majority does not know. But this is, of course, the entire market operates in two phases. There is the general economy where we buy bread and fish and stuff, and then there is the financial economy where all of this happens. So I'm speaking from the perspective of the financial economy and the effects, the ripple effects to the wider general economy, and all of this is going to be affected by what happens in this area and what we're discussing right now. So just be vigilant of what happens at these levels. And let me just clean up the chart a little bit. So all of these breakdowns that I'm removing right now could possibly occur, but right now what we can see, just using pure price action, is that we have this huge candle that is a weekly candle, and right now it's a weekend, and so next week we haven't seen signs of strength. We've seen signs of really strong weakness, because this candle was eaten up, this one was gobbled, and this one in the coming week should be taken out. And if this keeps on happening, then we're going to be confirming our bearish tilt. So in terms of this and much more, I'll keep you posted and updated, and this is how to trade the world's biggest stock market. Thank you so much for listening to this, and I look forward to hearing more from you. Thanks a lot.